Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So in this video, as you probably see with the title, I'm going to talk about 3 types of trading systems or trading approaches that you must avoid to in the markets to give you the highest probability in the markets. Okay, so I'm all about trading systems that's going to give you the best chance of doing well in the markets. Okay, because trading is hard, right? Trading is risky, and it's very, very, very difficult to get ahead in the markets if you don't know what you're doing. So I'm going to be talking about the 3 different types of trading systems that you must avoid. Now, this is, I'm going to put a disclaimer on here. I've already put a disclaimer on this thing, but this is the disclaimer here. This is just my personal opinion. People, trading companies out there and other systems out there and other places out there, if you do trade this is just my opinion. I'm not saying it's right or wrong. This is just my opinion. Now, I'm going to walk you through the 3 types of trading approaches that you must avoid if you want to get ahead in the markets. But I am going to talk about those 3 things, those 3 types of trading approaches. I am going to be talking to you about the best way to use those trading approaches if you want to use those trading approaches, okay? So companies out there, don't sue me, okay? This is just my opinion, and this is just the way that I truly believe how you should truly get ahead in the markets, okay? So let's get straight into it. Oh, before I do start, guys, I've actually just added to the Master Trader Lab, which you can get a free trial at mastertraderlab.com. I've just added a 8 video mindset series from my mentor. I was charging $197 for that, but I've actually put it in the Master Trader Lab, and you can check it all out for free at Master Trader Lab. So I've actually added that to all the other amazing content. So if you haven't got access to that, or if you are a member of that, go check that out in the Master Trader Lab. Now, let's get into the 3 types of trading systems that you must avoid in order for you to truly get ahead in the markets. Okay, so the first type of trading system that you must avoid is what we call against the trend. This is something that is so risky that I see so many people doing, and it's one of the most riskiest ways to actually trade the markets. And that's against the trend. Now, what I mean by that, just say, for example, we're looking at the daily chart here right now, okay? And if we see that the market has established some sort of a trend in place, now it has a definite trend, okay? Now, what is a trend? A trend is higher highs and higher lows, right? And lower highs and lower lows. So that's an established true trend, right? So if we look at the market, if we look at this chart here right now, as we're looking at it, what do we have here? Back through here, what do we have? We had a low, then we had this higher high, higher low, higher high, higher low. So as this market's doing this here, right? One of the biggest mistakes that a lot of traders make is, guess what? And I know this for a fact, they try to short it here, they short it here. They think they got it right, then it bounces up. They try to short it here, they think they got it right, then it bounces up. And they're trying to short as the market is rising. The market is always right. And if the market is in a true strong trend at that time, then trying to short it, remember, this is about probability, okay? This is not about, you know, getting every trade right. It's not about that, right? It's about giving you the best probability in order for you to kick butt, take names, and kiss those babies, right? So against the trend, if there's an established trend in place, as you can see through here, all through here, right? There was an established trend at that time. Trying to short the market would be very, very, very risky. I'll give you another example here. Let's go to GE here for an example. And let's just squeeze here, right? So as you can see here, right? Like when there's a clear downward trend, and you can see what with GE at this time I'm doing this recording, low, we have a lower high, lower high, lower high, equal high, lower high, another lower high, so on and so forth, right? Like, see how the market is, the dominant trend is down, and people that are trying to go long here, 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 and long, right? They're trying to buy it all the way down. If there's a true strong dominant trend, don't go against that trend, right? Because it's likely to smack you in the face. Now, as I said at the start of the video, right, there's 3 types of systems that I'm going to tell you that is very, very low probability, and you shouldn't trade them. This one system here, you should never trade. This never a trading approach. You should never use this trading approach in the markets, okay? So no there. Now, the next 2 I'm going to share with you exactly what they are, why you shouldn't trade them, and then also I'm going to share with you how you can trade them in order for you to kick butt, take names, and kiss babies, okay? So that's the first thing, is going against the trend. The next thing in the markets is using divergence signals. Now, what is a divergence trade? Okay. Now, again, this is just my opinion. Everyone out there that has a divergence set up, this is just my opinion. Okay. This is what I truly believe. I'm not saying it's right or wrong. I'm not saying you can't do well with divergence setups. I'm just saying it's not the highest probability way to trade, because what is a divergence setup by nature? It's what? It's against the trend type of trade, right? Now, yes, you may be able to do well, but guess what happens? Now, leave a comment below and let me know what you think about this. If you trade a divergence type of setup, right, which is generally a type of end of trend indicator. So if I bring up, say, let me bring up, say, this tab here, all right? So I brought this, that one there. No, this one here, okay? So I brought this, I added this tab here. This is actually the way that I used to trade, by the way. So a divergence type of trade, okay? We're looking at this chart here right now, aren't we? And we're seeing this is a double stochastic here, but I won't get into it too much, right? So we're looking for types of divergences, aren't we? We're looking for a divergence in the markets. So look at this here. We had here, well, look at this here, divergence here, and that was that bit there, right? We had a little rise, didn't we? But then look what happened, dominant. We had divergence here, didn't we? And that happened there, and then we rose and came back down, right? Ding, ding, ding. We had a little divergence there, didn't we? And that was there. And that actually had a nice rise, didn't it? But as you can see, right, look what is the biggest problem with trading divergence? One, you're against the trend, but guess what tends to happen? Your risk is at least 2 times to your profit. So if you're risking $200 on average, you're trying to make, generally speaking, and most of the time you only get maybe half of that, which is $100. You see a big problem there. Like, you need a massively high win-loss ratio just to do well. And that's the problem, right? Because the divergence type of setup is what? The divergence type of setup, there's another divergence here, right there. That was that bit there, right? Look at it, and bam. So as you can see, right, the divergence type of setup, now the traditional type of setup, right, is never going to work out well for that reason, right? So that is the biggest problem with trading divergence. It's generally against the trend, and the biggest profits are with the trend, right? So if you're trading this type of setup here, you would know that generally speaking, you're in danger of taking small profits because you're against the trend, right? And then having big stops. That's not putting the odds on your side. For me personally, and I'll talk about this in just a minute. For me personally, I want a high win-loss ratio, 90+% win-loss ratio, and I want to have the ability to have a small stop and a big profit. That's what I want, right? So that's what I'm seeing through there. And that's trading approach, or that's trading system type of number 2 that you should avoid at all costs. Now, I'm going to talk about just a minute how you can use that to really benefit, but it's a different type of a trading approach with the divergence. And number 3 is candlestick reversals. Again, I've traded candlestick reversals and I've mastered one candlestick reversal that does very, very high probability. But still to this day, right, what is a candlestick reversal? It's against the trend. Now, with a pullback, how long will the pullback be? Will it be strong? Will it be big? Will it be not? We don't know, right? We never know. When the candlestick reversal is going to be in. So if I go to, let's bring up this one here, and let's go to, I'm going to bring up the GDX here. I'm going to see if I can bring it back to that time that I'm thinking about. I cannot, can I? No. Let's go to Apple. There's a time there where there was a nice candlestick reversal. Okay, here we go. GDX. There was one on the GDX, wasn't there? I'm just looking at... Oh yeah, there was here, right? So candlestick reversals are okay. Again, let me go back to Apple here for a minute, because there was one on Apple that worked really, really well. And let me just share this with you here. Right? So I'm going to go back to here. Now, candlestick reversals are what? Are generally reversal patterns. And I'm using this as an example, right? Because this actually was an example I saw. But the thing is this, right? As you can see, what happened here, the market came down, created this candlestick reversal pattern. Now you can pick this out all right? And then we had a nice rise, didn't we? Now, again, I didn't give a shit about one trade. All I give a shit about is what the probability of that having a big run. Now, we never know, right? Because at that time, what could have we gotten? We could have gotten this low point through here, right? And then we had a rise, and then we had a lower high, and then we could have actually what? Then started to head back down. So it could have had a small rise. And the problem with, once again, a reversal type of trades against the trend type of trades is that you never know whether it's going to be a big reversal, like a nice big reversal, or it's not going to be a big reversal. Make sense? So they are the 3 different types of trading systems that you must avoid at all costs. Now, let's quickly recap. First system, against the trend. Just don't do it, okay? Again, we're all about what? Keeping our risk small and having the potential to let our profits run so we can have good profits. We don't want to be getting into small profits, big losses. And that's how it's so dangerous that way, right? You see all the time. If you know any company out there, or if you trade a divergent, or if you trade against the trend, try to trade, it's not good. The second one, which was divergence type of trades, right? Now, when does divergence work really well? Well, it works really well when there's what? When there's an established trend already in place. Right? An established trend already in place. Now, what does that mean? If you go over and you look at, say, let's do this here, okay? So if we go over here and we see this is the weekly chart and we have a nice high low, the market's coming down through here, this is what the weekly chart looks like. This point through here, if this is the daily chart over here, that we may look something like that, right? And then suddenly we start to pick up. And if we're at level of support where the market has actually started to rise up through here and so on and so forth, like we're getting a lot of support level, we're in a big upward trend and then a pullback and we're at this, say this was a support level, but then we're getting what? Then we're getting some sort of divergence on the stochastics or the RSI. That's when it's higher probability. Why? Because you're going in with the higher time frame trend. Smaller trend, we might have a small downward trend through here, but have a high probability of that trend picking back up again, and you just time your way in on that. Makes sense? So yes, you can trade divergent trade, but that's the highest probability. Again, you're jumping on the trend because you never know when the trend is going to end, right? And that's the same thing for the candlestick reversal patterns. The highest probability time to get into some sort of candlestick reversal pattern is that. Let me just share with you. Let me bring up the SLV chart and let me see if I can bring that back. There was a time there. No, I can't do that, can I? There was a time there. Oh, I just can't see it now. But same sort of thing, right? What are we looking for? What are we looking for? Weekly chart. And we have what? A high, low, high, high. Coming back down. Guess what we're likely to form here? Another higher low, right? So if we're at this support level here and we've got a nice little support level coming up through here, we're coming down to major support. What happens if the market comes down, and gives you a nice little candlestick hammer reversal with a big volume spike? Guess what? That's now likely to be what? We may get a bit of downward movement, right? But it may be the next time we get a pick up and a continuation of that weekly chart. So these are the 3 different types of trading systems that you must avoid at all costs. And the reason I'm not saying that they don't work, but I'm all about giving you the highest probability type of trading out there. And these are the 3 types of approaches that are always against you, right? Because you're always in danger of having small profits, big losses. Small profit, big losses. Now, if you use it the way that I talked about just the niche, what I talked about here by using the weekly chart and then jumping on a trend, that's different, right? Because you're already jumping on that higher time frame trend, that bigger trend there. Makes sense? And so therefore, what are we looking for? We're looking for a situation that's going to give us a high probability that we can have a really good chance of getting at least a 2-to-1 profit to risk. Makes sense? So we're risking, say, 100 to make 200. That's what we're initially risking there. So again, guys, this is just the way that I personally think, but these are 3 types of trading systems that you must avoid if you truly want to get ahead in the markets long term. Again, guys, it's all about probability. I'm not saying that these systems don't work. They do work. But they're very, very, very difficult. You're fighting the market, you're fighting the stream, and it's always a lot of pressure there. But if you can find a trend and figure out a really good time to jump on that trend, it's like a stream, right? It's like a river, it's like a stream. Guess what? You jump in that river and you're trying to fight against that current, it's hard, right? You might get a little bit, and then the current takes you away. Wouldn't it be better just to figure out where the current's going, figure out a good time to jump in that current, and let the current take you? Make sense? And that's exactly what we're talking about here on this video here. So 3 types of trading approaches or trading systems that you must avoid at all times. And if you are going to trade them, use what I've talked about in this video to give you the best chance of doing well in the markets. Hey traders, I'm giving away free access to the brand new Breakthrough Master Trading course. I'm giving away free complete access. This is what I want you to do right now. Go to johnsfreegift.com to get access to this right now. See, in this Breakthrough Master Trading course, here's what you're going to get. The very first 2 videos is based on the top deadly mistakes and the 10K per month plan. This is based on the foundations to your success. Videos number 3, 4, and 5 are all based on helping you become a chart reading master. How do you actually read the charts properly? Videos number 6 and 7 are 2 amazing, powerful trading systems. Video number 8 and 9 are based on my number 1 indicator and millionaire trade management. Video number 10 is based on the mind frame or the mindset of a successful trader. And video number 11 is the final step. But I'm running this as a bit of a special. I'm giving away complete free access. So go to johnsfreegift.com or click on the link around this page. Go right now. Put your email address right in here right now and get free access to this breakthrough trading course right now. So go to johnsfreegift.com and I'll see you over there.